back for Commodities Market Update. Now we have Bolanle Agbaje join us right here in the studio. Great to have you.
Thanks for having me.
Quite an interesting forecast there for March inflation. We know this inflation issue is still with us. It's 2022 into 2023, and it's still very much with us at this time. But this is a slowdown you are expecting.
But the prices,
the prices are still very high.
Yes, they still remain high, even though we predicted a slowdown from by about 0.06% to 21.85%. It's still very high, ridiculously high. And I think the only reason for the slowdown was because in March, we had seen, obviously, the cash crunch started, towards the end of January, or well, we felt the impact of it towards the end of January, more in February. But what we saw in March was that, many traders, farmers, they mostly try to adjust to the new normal in any sense, because business has to go on. And so we saw some innovative ideas from some of these businessmen. And so what they did was, give discounts for people that would actually pay with cash. So that obviously eased out the tension on prices generally. And also we had seen exchange rate, appreciate significantly. Currently, exchange rate is about 745 naira to the dollar, which is great. And also diesel prices dropped to about 700 naira per liter. So all those factors that we saw in March contributed to the slowdown we had seen in with our forecast in March.
I wonder if it comes out hotter than expected. What next?
Well, we do hope that our prediction is right or very close. And obviously the trajectory is the same, because all in all, it was what was evident in March. Not to say that, it wasn't a drastic drop in inflation, because that wasn't what we saw. But all in all, it's just to look ahead and see what, the MPC will do at the next MPC meeting. And what we also predict is that because it's very close to the handover date, we don't expect any surprises there, because that would obviously spook the market and, give signals that it's not supposed to pass through the market. So we expect that the MPC would most likely maintain status quo, just because of this prediction that we have when it comes to inflation rate.
Because we're not in the US Fed is there's chatter that they might, pause, interest rate hikes there. But there's still a possibility they might, go hard again.
Yeah, so if this thing is, when determining what exchange rate or what interest rates to, place, what the MPC committee figures out during that month, it's a very tricky thing. You almost have to closely watch the market and hope that you're not getting reversed impact on the market. So it's a day-by-day situation. They more or less see what has happened within the 2 months lag period, and then going forward they figure out what they're going to do. So for the US, they'll most likely watch how OPEC Plus's decision and all of that plays out in the market. The banking situation, the banking industry in the market as well plays out, and then figure out what they will do ahead. But all what remains is that inflation is still very high, around the world, and the central bank, their first point of call is to tackle that inflation rate.
So much battle. Looks like the battle is still going to be very hot in 2023.
It's most likely going to be there till the end of the year, because as much as you expect that, the interest rates really affects, or brings down inflation, it's still a gradual process. And right now, inflation around the world, especially even in emerging market economies, inflation is really high for most economies, and so bringing it down wouldn't be as easy as we expect.
All right, let's look at the oil market now. This start the week, raging with the bulls pushing after we got that surprise output cut, but now it looks like it's coming back down. At this point, the bulls losing steam.
Yeah. So what we must understand is that with oil prices trading at about $70 per barrel, it was because of the shock we had seen in the banking industry. And that obviously is not reflective of the fundamentals in the market, so the supply and demand fundamentals. So right now, with whatever OPEC has done, it has more or less brought the price back to, the reflective price. that reflects whatever happens with supply and demand. So right now, what we're seeing is that we had less than expected stockpiles, US stockpiles increase, and obviously that is the supply factor that more or less brought the prices down. And also the weak data from China as well, the manufacturing data is not also great for oil prices. So so obviously it declined it declined marginally, but it's still trading at about the price that OPEC Plus seems comfortable with.
So it looks like the dynamic we're seeing here is that once there's some kind of output cut, story, we'll see the prices jump.
Yes,
then
and then they stabilize.
Economic data issue now, drags the price
not necessarily
down.
Also, economic data issue that is reflective of the supply and demand factors. So it's not necessarily just economic data signaling, it's economic
that
data
impacts demand.
Yes, demand and supply. That's what usually affects or moves the volatile price of oil.
There's a really drag and pull situation we're seeing in that
But
market.
what we know is, all in all, it's not going to fall. We hope it doesn't fall below $80 per barrel. And, that price still keeps its momentum going forward. And also, you have to also give it time. This output cut would obviously feed into the market slowly. And by any chance, when demand picks up, you'll see that drag with supply, or the need to increase supply, and that's not going to be the case.
Talking about the output cut now, we're seeing our own, outputs beginning to, get better,
Yes.
Gradually, but the output cut is not affecting us. It's not impacting
it would
us
definitely not
we've not gotten there yet.
Yes, because we were never there to start with. So all in all, we'll most likely be increasing our production to the level that OPEC Plus actually gave the country. And once we get to that level, any going forward, I don't think would go past that level, because it wouldn't benefit it wouldn't benefit us as consumers of or producers of the
what are you saying for oil prices next week?
So next week, I guess oil prices will probably range between the $83, $84, $85 per barrel, except something significant happens next week. And obviously, we're entering the Easter period, so I think for prices, it will more or less, stabilize during that period. And hopefully next week, after the holidays, we expect that, oil prices move up significantly, but it has to do with, a significant, outcome or news to do with supply and demand.
And talking about, Easter celebrations,
Yes.
kicks off tomorrow, and obviously we still have that, lingering, cash issue,
Yes.
even though it's easing.
So with the talks of inflation, obviously going forward, in the month of April, we have the Easter celebrations, we have the Eid al-Fitr celebrations coming up, and also we have the fact that the cash situation or the change of the old notes as the legal tender is obviously going to affect the inflation rate going forward, and obviously increase cash circulation by about 25%. So obviously in April we expect that inflation goes back up, but for now we're happy that inflation has would most likely slow down marginally, but going forward we expect that inflation would.
And with festivities, I hope the payment channels actually work
yes.
this time, because there's going to be some kind of overload.
Well, I think they've improved, and I'm sure most of these bank e-payment channels have obviously looked for ways to adapt to the new demand they're seeing in the market. And I think for most businesses, I think they would say that the e-payment situation is most likely here to stay. It's still very hard for some people to get cash, and so most people are still relying on the e-payment channels, and we do hope that it gets better from here.
Yeah, we do hope it gets better. Looking at wheat prices now, we see that's coming down. That should be good news for us.
It's good news for us, because we're net importers of wheat. And obviously, hopefully, if this lasts long enough, it can affect the price of the final product, which is bread, for one. And also, the reason for this is because we're seeing the expectations of increasing supply in the US, both for wheat and corn as well. And that's obviously great news for us. With the issue of cocoa and sugar, cocoa prices have gone down, and that's just because you're seeing increasing supply from Ivory Coast, and Ghana as well. And also Nigeria, we're not doing so badly in terms of producing. So that obviously has brought prices down. But when you look at commodity prices in general, there would always be, you know, the upturns, the downturns, and it would just be nice for us to benefit when it's favorable for us.
And obviously the holidays are here. Are we going to be able to afford most of these domestic commodities? How's the price looking?
Yes, so I guess for the most part, prices, you have mixed signals with prices, or you have some products that, you know, prices are higher, and then you have some commodity prices that are lower as well. But all in all, I'm sure, well, with Nigerians, what we've seen is most people usually, they'll most likely reduce the amount that they buy or they consume of particular products, but the demand will obviously still be there.
And I know eggs are symbolic, you know, with Easter. I don't know if in these parts, but, you know, out there, but
and
we know how much...
there's scarcity of egg around the world.
Eggs are expensive.
Yes, they are.
Really expensive. All right, thank you so much, Bolale Agbaje, Senior Analyst, Financial Directors Company.
Thank you for having me.
Thank you. All right, so I will take a moment now.